2024 was looking like a great year for the stock market. And then August 5th happened.
Here with more. Good morning to you, Rebecca.
Good morning to you, Robin. And markets around the globe this morning are selling off.
In a single day, the entire market dropped by over 1,000 points, or about 3%. This was because of a few things: a weak jobs report, low earnings from major tech companies, and the Japanese stock market had its largest drop ever, which, I guess, has a correlation to the US markets. When the year went from great to mediocre, I decided a day after that drop that it was time to call in the smartest analytical mind that I know for a little bit of help. So I asked, "Dear AI, considering how poorly the market has performed lately, what do you think are the 5 best stocks to invest in for the rest of 2024?
All right, let's dive in based on the latest market news. First is Nvidia. Nvidia has been a standout performer in the tech sector, particularly with its advancements in artificial intelligence, AI, and graphics processing units, GPUs. Despite some recent volatility, Nvidia's stock surged by 3.6% recently, indicating strong investor confidence. The company's leadership in AI technology makes it a compelling choice for the rest of the year.
Now, I think we've all heard about Nvidia, but I wanted to know one other thing about the business, so I asked, do they use their GPUs in autonomous vehicles as well?
Yes, Nvidia uses its GPUs in the automotive industry as well. They have a platform called Nvidia Drive, which is designed for autonomous vehicles and advanced driver assistance systems. This platform leverages Nvidia's powerful GPUs to handle the immense computational requirements of self-driving technology and other in-vehicle AI applications.
To me, this made a lot of sense for this recommendation. Nvidia has constantly been talked about in the market, and it's a leader in a massive industry, so I can see why AI would recommend this one. I figured now was a good time to ask about its next stock recommendation, which surprised me.
The next stock is Alphabet, the parent company of Google, has been performing exceptionally well in 2024. The company has seen a 35% rise in its stock price, largely driven by strong advertising performance and advancements in artificial intelligence, AI. Despite its success, Alphabet's stock is still considered reasonably priced compared to other tech giants, making it a solid pick for the rest of the year.
I'm surprised AI recommended this one. I decided to ask if AI had heard about its recent antitrust suit and if it thought that would have a negative impact on the stock.
You bring up a valid point. Yes, Alphabet recently lost a significant antitrust case, which ruled that Google had illegally maintained its monopoly in the search market. This ruling could indeed pose some risks for the company, including potential fines and changes to its business practices, which might impact its stock performance. However, it's also important to note that the immediate impact on Alphabet's stock has been relatively minor and won't change much in 2024. Investors seem to remain optimistic about the company's future, largely because Google's search engine is still widely regarded as the best available, and users are likely to continue using it even without exclusive contracts. Additionally, Alphabet's diverse portfolio, including its ventures in AI and cloud computing, continues to provide strong growth opportunities.
Now, this made more sense why AI would recommend it. Alphabet will appeal the decision and drag this out for as long as they can, which means their stock probably won't be heavily impacted anytime soon. My flawed thinking was that the stock would tank immediately, but as of the publishing of this video, that still hasn't happened, and the logic AI gave makes a lot of sense. I decided that was enough for that one, and asked to move to the next recommendation.
My next recommendation is Microsoft, which has been another strong performer in 2024, particularly due to its advancements in cloud computing and AI. The company's Azure Cloud platform continues to gain market share, and its integration of AI into products like Microsoft 365 has been well received. Additionally, Microsoft's acquisition of Activision Blizzard is expected to boost its gaming division, making it a well-rounded investment.
Microsoft is almost always a powerhouse, so I wasn't surprised to see it on this list. But I had some things that I wasn't too sure about. First, what exactly did Azure Cloud do?
Imagine you're running an online retail business. You can use Azure to host your website, store customer data securely, and analyze purchasing trends using its analytics services. This helps you scale your business efficiently without worrying about managing physical servers.
That made sense. It's basically cloud computing that can help businesses of all sizes be more efficient. I know that's become a large part of Amazon's success, so I can see why it's important. Next, I had to find out a little more about how Activision Blizzard makes its money.
Activision Blizzard is a major player in the gaming industry and generates revenue through several streams. They sell video games across all platforms and own popular franchises including Call of Duty, World of Warcraft, and Candy Crush. Many of their games offer microtransactions where players can buy virtual goods, such as skins, weapons, and other enhancements, which is particularly lucrative in free-to-play games. Games like World of Warcraft require a monthly subscription fee, providing a steady revenue stream. And they also make money through esports events and advertising within their games.
Now, I'm not sure exactly where the Call of Duty franchise falls in terms of overall revenue, but it has to be one of the best of all time. I know kids and adults that love that game and buy every season pass and cool outfits that they think makes them look unique in the game, and they do this with real money. The same things happen in other games too. I didn't realize Microsoft was the owner of these games, but could see why this is looking like it'll be a big winner for the company. Time to move on to the number 4 stock recommendation, which was also kind of a shocker to me, at least through 2024, because, well, you'll see what I mean.
Tesla continues to be a major player in the electric vehicle market and has shown strong performance in 2024. The company has been expanding its production capacity and launching new models, which has helped boost its stock price. Additionally, Tesla's advancements in battery technology and energy solutions make it a compelling investment.
From a standpoint of pure company success, Tesla makes sense. But Tesla has another factor at play, which is Elon Musk. So I asked AI, do you think Elon Musk's outspoken nature on the X social media platform will negatively impact the stock price?
His involvement with X is seen as a distraction from his responsibilities at Tesla, which has led to a notable drop in Tesla's stock value. Musk's controversial tweets can harm Tesla's reputation, causing temporary stock price drops and increased volatility. Additionally, his tweets have attracted regulatory scrutiny and legal challenges, such as the funding secured incident, which resulted in a securities fraud lawsuit and a settlement with the SEC, further affecting investor sentiment and stock performance. Despite concerns about Elon Musk's use of X, formerly Twitter, and its impact on Tesla's stock, the company remains a strong long-term investment due to its leadership in EV and AI technology, market dominance, financial health, diversified revenue streams, and global expansion. While Musk's behavior can introduce volatility and regulatory risks, Tesla's innovative edge and robust business model make it a compelling choice for investors willing to balance these risks with the potential rewards.
I consider these fair points. Tesla has a lot of new revenue streams on the horizon, and even though Elon loves publicly airing grievances and says exactly what he thinks, fundamentally, Tesla seems like a pretty solid investment still. At this point, I decided it was time to move on to the last stock pick.
Amazon remains a strong contender for the rest of 2024 due to its dominance in e-commerce and its rapidly growing cloud computing division, Amazon Web Services. The company has also been expanding its footprint in AI and logistics, making it a versatile and resilient investment.
Now, I was well aware of Amazon's cloud computing revenue, but I was a bit confused on how AI mentioned that they were expanding into AI and logistics. So I wanted more details and asked how much revenue AI was going to bring to the company.
Amazon's AI initiatives are primarily integrated within its Amazon Web Services division. AWS has been a significant growth driver for Amazon, with AI playing a crucial role in this expansion. As of Q2 2024, AWS reported a revenue increase of 17% year over year, reaching $25 billion. While AI is a long-term play, it already contributes to a multi-billion-dollar revenue run rate for Amazon.
Well then, $25 billion is larger than entire companies, so that makes a lot of sense. But what about the logistics thing that AI mentioned? How profitable was that?
The company has been regionalizing its U.S. fulfillment network, leading to faster delivery speeds and lower costs. This logistics efficiency has contributed to Amazon's robust financial performance, with Q2 2024 net sales increasing to $148 billion, up 10% from the previous year.
This made more sense. So the logistics aren't really a profitable subset of the business, but instead, the logistics makes the e-commerce platform that Amazon has become known for that much more profitable. AI is officially undefeated. If you look on any of the top investment lists out there, all 5 of these companies are mentioned at or near the top every time. It's amazing to me how well AI can rationalize its decisions and see both the benefits and risks of companies that it recommends. Now, don't forget to like this video and subscribe to the channel so that you don't miss out on future conversations that I have with AI. One last thing to remember is that this is not financial advice. So investing in the stock market, it comes with a lot of risks, responsibilities. So do your own research, educate yourself, make your decisions on your own. Thank you for joining me in this video, and I look forward to seeing you in the next one.